Hi everyone, welcome back. Today we're commencing applications of financial mathematics. And we're going to be looking at percentage changes and charges. When we're dealing with tax and financial matters, we have to deal with a financial year. It doesn't start in January and ends in December. It actually starts on the 1st of July of one year and it ends on the 30th of June the following year. There's different years for different things. Financial year, unfortunately, does start and end at these times. First thing we're going to be looking at is income tax. So if you earn a salary and what happens is tax is taken out of your salary. So you'll see three numbers on there. One will be the gross salary, sometimes just referred to as gross. The other one will be how much tax is taken out. And then the last one is the net salary. So, be aware of that. Of course, it can go a little bit further than this, but this is just a basic one. Here's a tax table. I want to stress this is not the table that is current. So don't please go to the tax office or look it up and say, oh look, I worked on this tax table. This is not a current tax table. This is one that has been made up. Now, we'll explain this in class, but the first tax bracket is $0 to $6,000. You pay no tax on that one there. So first $6,000 is free. Any dollar that you earn over $6,000, you must start paying tax on it. Now, between $6,001 inclusive and $21,600 inclusive, you pay 17 cents in the dollar. The next one is 30 cents in the dollar, and that's between $21,601 to $70,000. I'm not going to go through the whole tax table. You can see that quite clearly. Right, so let's work out an example here. We've got John's gross salary is $45,730 per year. How much does he pay in income tax? Well, remember on the table that the first $6,000 was free, so no tax. So tax on the first $6,000 is $0. The next bracket was $6,001 all the way through to $21,600. Now, if you work out the difference between them, and of course you have to go 6,001 being the first dollar, it is $15,600. Quickest way to do that is 21,600 minus the 6,000. And how much tax is paid on that? 17%. So 17 divided by 100. And when we work that out, we get $2,652. The next tax bracket was $21,601. Now it goes up to 70, but his gross salary does not go up to that. It only goes up to $45,730. So we stop there. So how much is this? Well, we can do it. $45,730 minus $21,600, and we get $24,130. The tax was 30 cents in the dollar, so 30 divided by 100, and if we work that out we get $7,239. Now they want to know how much tax he pays altogether. We don't need to add the 0 because adding the 0 is still 0, but we do need to add these two here, 2,652 and 7,239, getting a total of 9,800. I'll just write this down. Gives us $9,891. Okay, because that's what they wanted to know. Total tax. Of course, it's not taken out as an income, it's taken out every time you get paid, whether it's fortnightly or whether it's monthly. Part B says, if he has been given a raise of $5,000 per year, how much of this will he actually receive? Well, he had already a salary of $45,730. Adding $5,000, he gets $50,730, which still gives him in the same tax bracket. So we don't need to worry about that anymore. we know that $5,000 he's still going to be paying 30 cents. So 30 divided by 100, and if we work this out, we get $1,500, $1,500 worth of tax on the $5,000, because it hasn't jumped in tax bracket, it's still in that 30% bracket. Okay, how much does he actually receive? Well, $5,000 was his raise minus how much tax he pays, which is $1,500. So he actually gets $3,500. Now it doesn't stop there, that's just one tax. Okay, another form of tax is called Capital Gains Tax Cgt. Now this is if you make a profit when you buy and sell something like shares or investments or anything else like that. Okay, we'll just look at this example over here. It says Daisy buys shares for $35,000 in October and sells them for $63,000 in March of the next year. If the salary for the financial year is $82,390, how much capital gains tax will she pay on the profits she makes on the shares? Okay, only on the shares, because that's where capital gains is. She's already paying tax on her salary. So for Daisy, her profit, $63,000 minus $35,000, she makes a profit of $28,000. $28,000. She earns $82,390 plus the $28,000, which gives her, and I haven't worked this out, but it's just over 100, 110,390, which is always at the 42% bracket. From 70,000 all the way through to 125,000, she pays 42 cents in the dollar. So we only need to work out $28,000 times 42 divided by 100, because remember, she's only paying capital gains tax on the shares, the profit she makes on the shares. When we work that out, she has to pay $11,760 on capital gains tax, which is just a tax, but they call it capital gains because you made a profit on something.
It's a lot, isn't it? It's a lot of tax.
It is a lot of tax. I mean, if you take that away from the $28,000 that she made, she doesn't really have much of a profit. You know, not much at all. The next part. There's another tax. You all know about this, GST, Goods and Services Tax. 10% is what it is. So let's work an example out. It says the cost of electricity supplied in one quarter is $288.50. How much GST will be added to the bill? Get your $288.50 and we times it by 10%. So we end up getting 288.5 times 10 divided by 100, and when we work that out we get $28.85. Okay, so that's a pretty easy one.
So the total of the bill here would be $288.50 plus the $28.85, just for argument's sake, so we know what the total is going to be, and that's going to give us an answer of 300 and...
I'll have to work that out, sir. Didn't think you were
what
going to
is
do
it?
that.
$317 odd or so.
Yeah, something like that.
Okay, so 300 and whatever. So that's fine.
Right, part B. It says if the selling price of a washing machine is $990, how much of this is GST? So there's a number of different ways we can do this, because remember, we normally get the GST and we add it to the original cost. Now GST is 10%, so we normally say the price is 100% worth plus 10% of the GST, 110%. But this time we want to go the other way around. So what we do is we get our $990, we times it by 100, because that's the 100%, divided by, and now in total we've got 110%, the 100 original plus the 10% for the GST. And when we work that out, we get $900. So the GST, we just subtract the two. 990 is what we sold it for, that included the GST, minus $900 without the GST, So $90 is the GST. Stamp duty is another form of tax. I know we seem to be only talking about taxes here, but that's what is actually happening in the real life. Again, I'm not saying that this table here is the true table as it stands currently. This is one that's just been made up. The table's a little bit different. From $0 to $20,000, you pay 1.4% in stamp duty. Then they work out how much it already is on $20,000. $20,000, your stamp duty is $280. And then you've got to add 2.4% on anything that's over the $20,000, and so on and so on and so on. Here we've got Brett buys a house for $480,000. What is the value of the stamp duty payable on this purchase? $480,000. If we look at that, it is in that third one. So it's $2,560 plus.
I thought I'm looking at 87,000 here. Sorry.
Plus 6% on anything over 115,000. So 2,560 plus 6%, and then we've got to find what's over 115. Now it's 480. So we've got times 480 minus, sorry, 480,000 I should say, minus 115,000, and we put this into our calculator. Now you can do it all in one hit. If you want to do it separately, you can. 480,000 minus 115,000 is 365,000, and then you can do it from there. But the total answer is $24,460. Now, he needs to pay that on top of the 480,000. Stamp duty is always added on top of it, and it's the purchaser that pays for it. Because remember, the person who's selling it pays the capital gains tax if they haven't held it for so long.
That looks like the government's making a lot
of money from everyone. All right, everyone. That's 21A.